Monaco 64, home of alternative economics and contrarian views. Wednesday, October 3rd, 2018. It's 6:30 p.m. London time. I thought it was important to do kind of an alert about the U.S. bond market. Um, it's pointing to some trouble ahead, in my opinion. I know all the markets are still very complacent. We have the Dow and the S&P at all-time highs. The Dow right now is up 140 points, almost at 27,000. S&P up 13 points. Nasdaq up 40 points. It's crazy that these markets don't seem to care. We've got the oil price at 4-year highs or so. At the WTI is at 76.25, up 1.5%. Brent is up at $86, up 1.6%. And the most, well, my alert is to do with the 10-year yield. We are at the highest yield since 2011. That's 7 years. So we are at 315. We've broken through the 312 level that we touched earlier this year, and bond prices are plummeting as well to 7-year lows, of course. So let's see who we've got here. Hi everyone. I just had to fix my screen. I couldn't see any of the messages. Hi Nasdaq. Hi Anonymous. Hi IK. Hi Lorraine. Neil from Houston, Jane Reynolds, Frank Rem from the Netherlands, quite a few people joining up. No, I just wanted to warn people, because right now, looking, if you probably turn on to CNBC or Bloomberg News, which I don't turn on to anymore because I don't want to be programmed by them. All they probably are going to be talking about is new all-time highs in the stock market. But I think there are things under the hood, or the bonnet, as the English call it, that are pointing to danger. I could be wrong, but I thought it was important to let people know that the bond market, the U.S. Treasury yield, the 10-year yield, is at 7-year highs. It's at 315 right now. And that's important because I don't know if any of you saw last few days, there's an article by Michael Snyder about how the U.S. ran a almost $1.3 trillion budget deficit in the last fiscal year, ending September 30th. And now they're going to run a $2 trillion deficit. The Fed's going to sell 600 billion treasuries in the next fiscal year. And the interest rates are going higher, the yields. That's going to be a cocktail for disaster. I think it's going to bring the whole U.S. economy to a grinding halt. Not that, in my opinion, it's doing that well. And it's going to be the interest rates. The government yield, the 10-year yield, is the benchmark for all other interest rates, mortgage rates, consumer credit rates, car loans, everything, and they're going to go higher. They go up more than the Treasury rates because they're not as risk-free. So I wanted to warn people about that. The other thing as well, oil. I mean, it's really oil, and both Brent and WTI are really breaking out. And it doesn't seem like any news about, increase by OPEC or threats from Trump. They don't seem to help. So it looks like a cocktail for disaster, I would say. Right now, I think a lot of people are, jumping into the fire. I read yesterday as well that record numbers of retail investors are still piling into the stock market. Does it mean that I never think it's okay to invest in the stock market? No, but longer term, I think it's like owning a business. So you shouldn't really worry about the stock market, but I'm sure there are a lot of people who are getting in there at the top, and they're going to be hurt. Longer term investors, people like Warren Buffett, they don't care about these things. They just ride it very long term, but most people don't. And yeah, so as I speak right now, it's quite amazing. So let's see what's going on here. Quite a few people. Iran is threatening to close Hormuz. People try. I don't follow Boeing stocks. I'm more of I follow more the overall, macro picture, but I can have a look later about Boeing. But one thing that there's a lot of talk about why is oil going up because of the sanctions, but those Iran sanctions and Hormuz problems, they're already priced in. This is more something else. I think this is 10 years of money printing and negative interest rates, zero interest rates, trillions and trillions created out of nothing by central banks. This is that coming home to roost. And that's why I think oil prices are going up, because it's a hard asset. It's finite unlike fiat money. It's not as easy to print, to take out of the ground. And this is what I think is happening. And yeah, interest rates are gold and silver. Jacare Nalagoa just asked. Well, silver is basically unchanged today. Gold is slightly lower, but I think this is going to be short-lived. I think it's only a matter of time before gold and silver start moving higher. I can't see gold and silver staying this low with the yields spiking like that, with the oil price going up. Yeah, it's we're going to get a stagflationary scenario, in my opinion. And in the 1970s, interest rates went from around 5-6% in 1971 or so, all the way to 16%, the 10-year yield in 1981, and gold went from $35 an ounce to $887.50 an ounce. So I think if we look at the official statistics, the Fed, from the government, it looks like interest rates are real because their measure of inflation is low, but the real inflation is way above where interest rates are. So once people figure that out, gold's gonna keep going up because real interest rates are negative. If you use real world cost of living rises, not the phony PCE that the Fed looks at, or the CPI, the core numbers, which exclude, food and energy, things that people need. So let's have a look here, see if the 10-year yield has changed any. 315 still on the highs. So I was looking at it closely today, and 312 had been the high for the last 7 years and the high earlier this year. And it was stuck there for quite a while. And then it just spiked higher, and it's now at 315. So not looking good. So what does that mean? The yield's going up. It means bond prices are going down. It means the cost of borrowing for the government is going to go up. I'm not really sure what these guys are thinking. Congress and the Trump administration, running up a $2 trillion deficit when interest rates are rising, and when the Fed's going to start unwinding $600 billion of treasuries. I mean, the economic advisor Trump has, Larry Kudlow, I think is a snake oil salesman. He used to be a propaganda economist at CNBC, and he's nothing more than that. He's not doing the right things. He thinks the U.S. economy can grow out of a 6% budget deficit, good luck, Larry Kudlow, especially with the 10-year-old spiking like this. Yeah, he is a snake oil salesman, Larry Kudlow. He's he's a pure, he professes himself as being free market, but he's not really. He's a debt-friendly economist. Oliver Bristol, do you think a value investing stock picking strategy could still perform through the coming market turmoil? Yeah. Once the dust settles, yeah. Right now, I think there's very little value investing to be done, except in commodities. I think commodities, especially precious metals and mining shares, are still very undervalued. And everything else, technology, the blue chips, in my opinion, are way overvalued. They're not providing value at all. Butts and banger gold dropping off. Well, gold is around 1,200. It is down a little bit, but I'm not concerned about it. I'm not concerned. I'm sure they're trying hard to keep people's minds away from the fact that the Fed, even though and I've said this many times, I actually think the Fed is behind the curve. They left rates at zero for too long, for about 7 years, and they printed too much money. And I think they're, even though they've raised quite a few times since 2015, it's still very, very low. Interest rates, and that's what oil is pointing to. It's pointing to the fact that the dollar is becoming worth less and less, that there's too much debt. No one ever talks too much about the debt. They go on TV or and say, oh, the economy is doing great, but they never ask the question, we're going to be running a $2 trillion deficit, 6% of GDP almost in the next fiscal year. Chris Weiner, hey Mario and Sharon, cover the camera on your phone during the test at 2:18. Why let them snap our picture for their database? Not sure you mean by that. What do you mean 2:18? Okay, I'm not sure what you're talking about there, Chris. Would oil go above 100? Well, it could easily go above 100. I mean, the Brent is already almost at 90. And right now, it doesn't matter what Trump says or what people talk about, supply and demand. The price is rising. So these nuts, Amazon raised the minimum wage. Yeah, I saw that. Thank you, John Hill, for the super chat donation. I don't follow Tether, John Hill, so I couldn't say it's not some coin I've really involved in or know anything about. Tether. FEMA test. Oh yeah, that's October 3rd, isn't it? It's today. It's actually my birthday today, by the way. It's Monaco 64's birthday. It's also German reunification day. Back in 1991, when East and West Germany got back together, they were separated, since 1945. Yeah, thanks. I didn't want to really say it, but it came out. Yeah, there is a FEMA. I saw that it was a FEMA test. Is it at 2:18 p.m. or something like that? I'm not sure. Billy's here today for the live stream. He hasn't been in the videos lately because he's been sleeping in a bit more. I've been doing my videos fairly early, and he's still upstairs asleep. Yeah, 2:18. So we've got about half an hour till the message from FEMA or the U.S. government. Yeah, thank you everyone for the best wishes. So let's have a look where the 10-year yield is right now, because I think that's really important. I know there's, you're not hearing much about it, but it's very significant. We're at 315, the yield. That's a 7-year high. Yes, 7-year high. That's very significant. I mean, I've been covering a lot of what's going on in Italy, and their yield is dropped today, but the U.S. Yield is, the bond market in the U.S. is making some moves here that are concerning. And I find it amazing. I think one needs to be very careful if they get into the stock market now and try to, join the party. I mean, for long-term investors, fine. If the market corrects, that's okay. But we need to be careful. I think, and oil prices as well look very elevated here. They're up another 2% today. WTI is at 76.60. The Brent is 86.40, so up 2%. Oh, thank you, Jacare Nalagoa, for the super chat donation. He says, "Happy birthday." Thank you very much. Yeah, in Brazil, Jacaré Lagoa is from Brazil. In Brazil, they have, I think, general elections. I think it's on the 8th of October or 7th. I'm not sure. I could vote, but I'm not really interested, and I'm not following it. And then there's the top two candidates for president in that election. They have a second round on the 28th of October. 5-year and 10 years, all the same. Well, let's check the yields here across the curve, which I hadn't looked at yet. Let's see. US curve. So right now, the 5 years at 302, the 10 years at 315, and the 30 years at 330, and the 2-year is at 286. So actually, the curve is not flattening or inverting. It's actually steepening, because in the last month, the 2-year has gone up 23 basis points, the 5-year has gone up 28, and the 10-year has gone up 29. So actually, it's starting to steepen, which is an interesting thing. But over the last year, of course, it's flattened a lot. But not looking good. It's going to affect all borrowing rates everywhere. The bond market going lower, and I think at the moment the stock market. I think the stock market is oblivious to what's going on in the bond market, but we need to be very careful, because all financial assets, stocks, corporate bonds, derivatives are priced off the risk-free rate of return on money, which is considered the U.S. 10-year. We've got like a how can I say, a troll here. Gonna get rid of him or her, whatever. Gold is down 0.5%. Let's see. Well, I've got gold down 0.25% on my system. I've got spot gold right now exactly 1,200, down $3. I'm not sure which gold you're looking at. You could be looking at the futures. I got silver unchanged right now, 1468. I'm not concerned about the fiat price of the precious metals right now. Yeah, so stock market is so manipulated. Yeah, it is. How long more can are they trying to lure in the small investors and crush them? Because from what I read, a lot of the insiders have been liquidating over the last few months. So you never know. the the Shell Brell comments on gold price. Elliott waivers say bottom at 850, 900 ish. Uh, Elliott waivers. I mean, I did follow Elliott wave analysis, but a lot of times they keep changing their waves. There was a famous Elliott wave guy. I forgot his name. 10 years ago, when gold was at 400, he kept saying it was going to go back down to 250, and then it went up to 1,000, and then 1,900. So I can't see gold going to 850 or 900 right now, especially with the bond markets, losing control, because there's a difference between yields rising, how can I say, smoothly and at a moderate pace. But there's a difference when yields spike like they're doing now and like they could, and oil prices going, through very key levels, 4-year highs. I mean, it doesn't make any sense that gold would go to 850. Of course, anything's possible, but if I don't have to sell it when it's at 850, and I have extra fiat money, you can bet that I'll be trying to buy as much as possible at that level, especially if everything else is as it is right now. Dow at almost 27,000. So that's my view there. Brent to 92. Yeah, I mean, they've both broken 50% retracement of the last big move we've had in the last few years. So right now, there's not much to stop it. Oh, you're welcome, Shell Brow. But trading, you have to be nimble with gold if you're trading, of course. Yeah, presidential emergency 218 last 30 minutes. So maybe we could be we could be on the live stream. We could still be doing this. I'm not getting one. I think that's what Chris meant to say, but I'm not in the States, so I'm not getting a message from POTUS or FEMA. Chris Warner, too many buyers of precious metals. Really, I don't think so. I mean, I don't think there is. I think there's too many buyers of stocks and bonds, if anything. But the video, 850 at 850. Yes, Chris, the premium would be like you'd have to probably pay 1,100. If it was being quoted on COMEX at 850. Evening, Kevin. Nice to see you. Well, the yield spike right now, I think the euros has been down more because of Italy. So the euro is only down 1/4%. The pound is unchanged, but it could even if U.S. yields start going up too quickly, that's not a good thing, because when yields go up too quickly, that means that the price of bonds are dropping very quickly. And even though you're getting a better, if let's say you bought the 10-year yield at 3% last week at a price of 100, let's say, and now it's at 325 and the price is 95, you've lost 5% of your money there. And that could be a problem for the dollar. But if that interest rate rise or yield rise is slower, not so much. So if anything, it could be negative for the dollar. Sporting Science thinks maybe someone will start buying bonds tomorrow. Very possible, but who knows? What about Dow 27,000? Well, it's very possible. We're at 26,927, the Dow futures. So I guess the index is pretty much at the same level. Let's see, the 10-year yield right now, 315 still. That's the high of the day. And I was looking at the 10-year futures. That's not looking good as well. Uh, so they're holy Dow, yeah. I, I think it's yeah, it's like almost become like a thermometer for the economy. If that's going up, it means everything's fine, and people are being distracted by everything around, like Kavanaugh, all the silly things, and no one's paying attention to the bond market. I think that's the biggest thing. They might call it a black swan, but we can see this. How it can't go on like this with the debt increasing so much, 21.5 trillion now, 1.3 trillion deficit in the last fiscal year. Sasquatch, what do you think about Harry Dent? I've said many times about Harry Dent. He doesn't understand monetary history. During the Great Depression, the dollar went up because it was gold. And if we do have another deflationary collapse, gold will go up and the dollar will go down, because right now we've got fiat money. Dollar is debt. Back then it wasn't debt. He doesn't seem to get that in between his ears, Mr. Dent. Prof. Grampy, POTUS can kiss off. I'm turning my phone off. Yeah, Chris Weinert says totally do every 10 years in bond market, the crisis. That's right. I remember one of the worst, when I was in the city, in the markets, one of the worst crises, bond market crisis, was in 1994. And that was because Alan Greenspan started raising rates around, I think, end of 92, beginning of 93. And he raised rates too aggressively, and the bond market collapsed. And that's when you had the Orange County bankruptcy in California. That's when you had the tequila crisis in Mexico. So we could have the same kind of thing right now. With this Fed Chairman Powell raising rates as well, maybe too quickly, even though I think they're way behind the curve. It could trigger another collapse in the bond market. And then he would have to backtrack completely and cut rates. So interesting times. Yeah, that's right. The 315 yield is the highest in over 7 years. The Shell Brell comments. Yeah, T Hambone. No, it's frustrating because I get a lot of times the question about Harry Dent. Oh, Yuri Claver says, "Love your show." Thank you, Yuri. Thanks for being part of it. They're gonna be triggered, Faith, if they get a call from Trump, aren't they? They're gonna start going mad and crazy. Pablo, yeah, no, not that late, only 28 minutes. I'm gonna stay through, hopefully through this text message from the U.S. federal government, emergency text or whatever. We'll have to see what it might not be anything. Aaron Levy says we're now at 316. Let me check my Bloomberg yield, the price here. Come on, getting stuck. Yeah, I still got 315. I mean, it could be 316. Mine is not a completely live update. Gold is just hovering around 1200. Silver is at 1465. The Dow is 26,925. Batten down the hatches. Yeah, the bond market is tanking fast. As As the yields rise, the prices drop. The other thing people forget is a lot of the banks, the big Wall Street banks, what they've been doing is they've been buying because money has been so cheap. They've been, and the regulations, the regulatory environment says that U.S. Treasuries are kind of risk-free. So a lot of the banksters on Wall Street and everywhere else, they've been buying Treasuries very cheap because they get money almost free from the central banks, and they've been parking their uh, purchases on their balance sheet, and their balance sheet is based on U.S. Treasuries. So the other problem is if interest rates start rising very quickly, the price of their assets are going to go down, and that's going to hurt banks as well. And what do banks do in our present day economy of credit and lending? They lend, and if they don't have as many as much value of assets to lend on top, they'll have to cut down. So pretty interesting. Yeah, 30 years at 332. The whole curve is going up quite a bit, and even the longer end is going up a little quicker. Aesop's, do you follow Martin Armstrong at all? He suggested Dow possibly going to 40,000 money tries to find a safe home away from the bond market. Well, that might be so. I mean, in the 70s, the bond market was in a bear market, and money didn't go into the stock market. I'm not too sure about that. He could be right. You never know. In Venezuela and other countries that have had hyperinflation, having money in the stock market has been a good place to be. But precious metals have outperformed even more. I know right now gold and silver are not doing that well, but I stick to my guns on that. Lord Humongous, yeah, the credit markets could implode because a lot of the loans are made off. The interest rate on government bonds, they set interest rates for everything else, and when the interest rates in the treasury market start going up, all other interest rates start going up even more because they're higher risk. So if the 10-year treasury goes up 10 basis points, the 10-year mortgage will go up 15 basis points. Credit card interest rates will go up. Everything will go up, and it could bring the whole credit market to a halt. It could be that snowflake that Jim Rickards talks about, and you could even have that what's it called? That book he wrote about the free. I forgot. You guys probably remember, but we could basically see a total freezing of the financial markets. Hi, Calvin. Floyd Palmer, what are your thoughts on the Triffin dilemma tweet from the St. Louis Fed? Bitcoin could eliminate. Yeah, the Triffin dilemma is basically to do with reserve currency. A Belgian economist in the 60s said that the problem with having reserve currency for the world, like a fiat money economy, or even on a U.S. Bretton Woods, is that that country that has a reserve currency has to always run huge current account deficits so that other countries can expand their money supply. Yeah, I saw that comment about the Fed, St. Louis Fed guy, that Bitcoin could help a new reserve currency, but maybe. But what about gold and silver? I think the market would want to see that as well. Who knows? It would be at a much higher price if that were to be the case, though, because there's not too many Bitcoins around. I don't know, about 16 million at the moment. Yeah, I've checked out the bond chart, Calvin. The 10-year daily or monthly continuation going back 20 years. We are at key levels. We've broken a 7-year low. So where are we now? The 10-year yield, 316. There we go. Keeps going up. 316. So today we're up 10 basis points. That's very significant. 10 basis points. That's a big move. So we've got what, 12 minutes to the FEMA text or whatever. Pablo Peanut, does the new USMCA, does it benefit USA more by a lot? It's this new NAFTA, isn't it? I mean, I haven't read much about it. I personally think it's just NAFTA called differently, but I can't really say exactly because I haven't looked at the details. One thing I heard though is that dairy farmers in the US will be able to export to 3.5% of the Canadian market. Doesn't seem too much though, 3.5%. So I personally think it was more of a political move, even though, don't hold me to it. I haven't read the details. Maybe you guys have. I think it was more of a publicity stunt by Trump. Is it really going to help? Is it really different from NAFTA? Not too sure. I think the ECB will stop QE by the end of this year. The shell. Crypto Nate, is it true that all this? Yeah, the fake money, or the printing, what it does, yeah, of course it helps temporarily, create jobs, but the thing is, it creates a lot of what the Austrians call malinvestment, the business that are created that normally in the more sane monetary environment wouldn't be around. So the problem with that is that people who get jobs with these businesses, when the tide turns, they get wiped out. These firms, and then a lot of people lose their jobs. It's not like a steady, consistent, and stable, future. That's the only problem with it. Donald Bump, Mario, CBDC, heard it all. The Biz central bank digital currency. They're developing it, at least interested in it. Yeah. Thank you, Jeffrey. Thank you. FEMA camp 10 minutes. Ha ha. Yeah, they're gonna say I don't know. I don't know who. Everyone report to your local FEMA camp. It's like Alex Jones. You say FEMA camp zone or Texas. Crocodilo oligarchy bought DC, should be using hemp. Tesla 3, US trying to throw the regime in Iran. I think they are, especially, it's not the US, I think it's Israel. And, in US is doing Israel's bidding, because I heard that even in the UN last week, some of the US envoys to the UN said that Iran was not, did not have a nuclear weapons program. So go figure. Mark Farrakhan from Belgium, 100 billion US that today. Is that 100 billion new a day? That's I wouldn't be surprised. Rick H, just the name NAFTA has changed, and we can use 1% of Canadian dairy markets. It's fake like Trump. Yeah, I just think I smell, it's very convenient. It's come out just before the midterms. What website do you use for real-time commodity prices? Well, I've got an account here, a stockbroker in the UK, and they also do spread betting. It's called IG.com, and they've got live prices for almost everything. That's what I use. Crypto Nate, hit the like buttons. Yeah, thanks, Crypto Nate. Thanks, Faith. Jack Haslam. Yeah, of course, if the yield doesn't stay up here and goes back, uh, it's it will things might be okay. But what makes me think that won't happen is the rest of the curve is coming up. Even the 5 year now is above 3%. So I think it's really moving now. We've got commodities like oil moving up. So yeah, it's but we need to see if at the end of the week we could even be at 325. That would be like a really, really bad signal. I think that would be the next level to, because bond markets look a lot at levels like 3 1/8, which is, let's say, 3.125, 3 1/4, which is 325, 3.5, or even 3 3/8. It's interesting because I did do a lot of U.S. Treasuries, cash Treasuries, not just future, and it's a funny market because they still work in 30 seconds. The prices are quoted. In 30 seconds. So if it moves from 100.00, it moves up to 101 30 seconds. So it's all these fractions. It's quite interesting. So I would say the next key level would be 3 1/4. Yeah, and also 3 3/8, 3.375, 3.5, 3 5/8, even 7/8. They use a lot, and the stock market used to trade in eighths as well, and then they decimalized it. John Callan, no, I didn't really try to get this professional trader thing to get more margin requirements because I don't really use margin, so I didn't bother with it. Aaron, I think it's only Americans who are getting the FEMA text, or maybe foreigners who are in America. I think if you have your mobile phone is with a mobile phone or cellular phone line provider that is American, you'll probably get it. Even an American who's traveling in Europe but has a Verizon network phone, he'll probably get the text as well. And I don't think I'm not sure. I haven't looked in details, but I don't think I'm going to get one. I've got a Vodafone, which is a UK, network. 11th of November. Yeah, some people think 11th of November is going to be an important day. 11/11/2018, and if you add the 2018, you get 11 as well. Some people are talking about the 10th of October. Yeah, Bitcoin, Lord Humongous. Yeah, it's kind of going in a triangle. We're getting near the apex. It's either going to go to 6,000 or break up higher. What are the cryptocurrencies doing right now? Yeah, still not much. 6,500 basically at the moment. Bitcoin. All right. Is it coming? Is it come out already? The FEMA thing. It's 2:15. Is it 2:16? Should be in the next minute. 10-year yield, is really moving higher today. It's at 316. It's a 7-year high in the 10-year yield. The high this year had been around 312, 313. So it's broken that by 4 basis points, and we're up 10 basis points on the day. So that's, in my opinion, very significant. So, and I've said that, the other thing that's really significant is that oil prices continue to go higher, which could be good for the Norwegian krona, of course. Oil is up another 2% today. Earlier it was up 2%. Now it's up about 1.5% at 4-year highs. FEMA is a federal emergency and agency. The American public should know. Federal. Let's just look. FEMA. Federal Emergency Management Agency. That's FEMA. It's the federal agency that's supposed to come into action if there's some kind of emergency in the United States. It's a federal. Yeah. FEMA is a butter brand as well. Yeah. Why is the VIX not going up? Well, because the stock market is going up. VIX is a measure of volatility in the stock market. Usually when stock market prices are rising, volatility stays really low. VIX is a measure of volatility. VIX will go up, though, if, let's say, tomorrow the Dow drops 400 points, it will go up. FEMA countdown. Prepping for those who do not prep. Yeah, but if yields keep going up, that just means that borrowing for the U.S. government becomes more and more expensive. That means that borrowing for consumers become more and more expensive. And why do yields go up? Well, because investors sell bonds because they think the yields are going to go up. So they sell it and it drives the yields higher. I personally think because since 1981, yields have been on a downward trend, but they bottomed in 2016. That's my opinion. The 10-year yield was at 135, but now it's at 316. And I think the era of easy money is ending. And that's why I'm raising an alert, because if the era of easy money ends, that means the consumer and credit-based economy is going to have trouble. And that's why I think the stock market, people need to be careful if they're getting in right now. Lord Humongous, I just got the emergency Trump alert on my phone. What did it say, Lord Humongous? Still nothing. Just goes to show how governments are inefficient, right? Bureaucracies, they can't even get it right. Trump is a Jesuit. Yeah, there's a lot of Jesuits around. Mario Draghi went to Jesuit school. I think Mark Carney, Bank of England governor, went to Jesuit school. The Pope is a Jesuit. They're in control, it seems. 325. I don't think everything will collapse at 325. I think the key level here was 312, which is the recent high, but 325 is possible. The other thing, Gur, is that how fast it goes up. Like a 10 basis points move like we had today is quite sharp. And if we, let's say by next week, we're at 3.5%, then we have a crisis. So it depends on how fast it goes. But if he only gets to 325 in 6 months' time, then that's not a problem because the market can adjust to that. It just depends on the speed. Floyd Palmer, FEMA person is to make people afraid. It could be, it's to keep people scared. Yeah, but it will affect UK interest rates. I've noticed already that UK interest rates have also gone up in the last month. Uh, they've gone up about 17 basis points. They are off the highs from last week. The 10-year yield in the UK is still at 157. It was up 5 basis points today, but you can bet if there is trouble in the US bond markets, all other bond markets in the world will follow. How come the dollar, bonds, and the stock market goes up at the same time? Well, right now, first of all, the bond market is going down. So bond prices are going down, the yields are going up, and the stock market is going up. So that's what's happening right now. Bamboo rates up, good? No, it's not a good thing. An economy and a financial market that thrives on easy money and low interest rates, rising interest rates is no good. But right now, as I've said, uh, the stock market's still doing well. I think people are complacent. I could be wrong, but I don't see how, you know, it makes sense that we are seeing a spike higher in yields and the stock market making all-time highs. I think one needs to be very careful. Long and short, what do they mean? Basically mean long is if you buy something, you're long IBM stock, you buy IBM stock. Short is if you go short if you sell it. But in this sense, short, a lot of times it applies to futures market. You go short. You could be a stock as well. So you'd have to borrow from your stockbroker and then sell it short. Was Obama a better deceiver? I think they're all great deceivers. Um, all the presidents. That's why they're picked. Pablo Pinamara, the other day, IMF Christine Lagarde warns nation to resist self-sufficiency. Why? Well, because she's a globalist. She doesn't want countries becoming self-sufficient. There's a lot of countries that could, like Russia, Brazil, Argentina, countries that have a lot of resources. Thanks, Deborah, for the birthday wishes. Jake has on deflation, rising rates. Yeah, I don't think gonna get. It depends. It could be a deflation. Could be a deflation of the financial market, but in terms of consumer prices, we've got inflation. Um, Jens Jorgensen. Oh, thank you, Jens, for the compliment. So I didn't get this FEMA message because I'm in the UK. So did any of you guys get this text from FEMA or from Trump, whoever it was? And was it interesting or? Let's see. Where's the 10-year yield now? 316. The high's been 317 today in the 10-year. Philip, in the In the 1960s and 70s and early 80s, the bond market was in a bear market. Yields went like from 5% to almost 20 in the US, and gold went from 35 to 887. A lot of people in the mainstream will say that raising higher interest rates are bearish for gold, but I don't think it is, because I think they're behind the curve. I think the real rate of inflation is a lot higher than the yields right now. Billy here, he's asleep on the sofa. Dontro on Shambos, we wish more people as honest as you. Oh, thanks. I mean, that's what I try to do here, just tell it like, tell you what I'm thinking for myself. And if you want to, listen to me, you do. If not, you don't have to. Gold under 1,000 next 12 months. What do I think? Right now, where we are with all the debt that's been created, 2 trillion in debt in the U.S., rising oil prices. If gold was at under 1,000, I would be very shocked, and I'd try to buy as much as possible if I can at that price. But I can bet you that if it's quoted at 1,000 on the paper price on Comex, you're going to have to pay about 1150, even 1200. So you won't be able to find any coins or bars for 1,000 an ounce. That's what I think. Yeah, a Friday, the non-farm payroll. That's always that number always seems to it's the key number still people look at. Again, that number's hypothetical number. The non-farm payroll number. It's actually they calculate. They don't go around asking companies how many jobs they've created. It's a hypothetical thing. It's like a survey they do, and they extrapolate. And the unemployment rate doesn't count the 96 million Americans that are out of the workforce either. Is there ever a case where the gold price collapses as a whole altogether? No, I mean the only currencies that have proven to collapse in the last 5,000 years are the fiat paper money currencies. Gold has held its purchasing power for over 2,000 years. You might get a rise in the dollar or a drop in gold temporarily, but not a collapse. I've never seen gold collapse. Thanks, Michelle. Yeah, it's my birthday today, October 3rd. Yeah, the U6, that's a unemployment rate over 10%. I recommend people go to shadowstats.com, John Williams, and he shows us where the statistics like unemployment, CPI, or inflation or GDP would be if the statistics were still calculated like they did in 1980 or 1990. They've completely, you know, there's always a lot of criticism about the Soviets that their statistics were doctored, that things were like, always perfect in the Soviet Union. And I'm sad to say that in the US and Western Europe and in the UK, we're now like the old Soviet Union. Uh, you know, we're told that everything's great, the statistics look great, unemployment rate, GDP, but it's all a lie. It's all a facade, in my opinion. Not only my opinion, but a lot of other people's opinion. Thanks, Marine Stew, for the super chat donation. He says, "Happy birthday." I appreciate it. Communism 101. Yeah, it is, isn't it? Where I live near Seattle, there's hiring signs literally everywhere. Yeah, I mean, I've heard of that. But don't forget, uh, the U.S. Government is borrowing 2 trillion a year, so it is going to create some jobs. There's still a lot of people that are not in the workforce, and I don't know what kind of jobs you know that are being advertised in Seattle. So there's another troll here, Zachary Holman. Maybe we don't need him. Yeah, he's out. Yeah, I saw that thing about Starbucks accepting Bitcoin. What's crypto? Thank you, What's crypto, for the super chat donation. I appreciate it. Um, so where's the 10-year yield now? Someone said it's at 317 now. So that's I still got 316. Mine might be a little delayed. Um, Patty Back. Oh, thank you, Patty Back. Yeah, the 10-year yield. I'll tell you guys how the treasury market works. It's not on an exchange. It's what they call over the counter. So it's just dealers from banks, brokers calling each other, and they trade sometimes on the screen or on the phone. I did some broking of cash treasuries from London. Thank you, Johnny Ringo, for the super chat donation. I appreciate it. Yeah, so 318, it's moving quite fast. So that's not a good sign. Of course, the stock market is probably going up, which makes no. Well, actually, the stock market now is coming, is still up, but not as high. Let's see, we're up 112. We are about 70 points off the highs. Gold is down a little bit here, but as I said, not concerned. Crude oil still elevated. Translogic, I appreciate the super chat donation. I appreciate everyone. That's very, very nice of you. Thank you. Facade or Passat? Facade. A Passat, the German car. Yeah. Is Nasdaq getting hammered? Let me see what the Nasdaq's doing. No, the Nasdaq is up 25 points, or a third of a percent. Gold is getting hit. Gold is near the lows of the day. Makes a lot of sense, doesn't it? Not. It's just silly. Jake Haslam, 11 basis points is not unprecedented. In 1994, there was a bear market in bonds. I spoke about that earlier. That was when Alan Greenspan started raising rates, I think in 93, and he overdid it, and the bond market collapsed, and they had to backtrack. And we had worse days then, because interest rates, 10-year yield, a normal yield used to be, for many years before the '08 crisis, the normal yield used to be between 6 and even 8% you could get on a 10-year. So you could have days where it went up 25 basis points, or sometimes even more. But yeah, 11 is quite a big move. Eugene Dittler says this is the biggest financial story of the last year, and as usual, the market riggers just keep the game going. This should get explosive. I agree with you, and the people on CNBC as well. They're probably just covering the all-time high in the stock market, and they're saying that bonds are going up because the economy is doing great. They always say that. I remember Bob Chapman, see Joe. My wife and I used to love listening to him on Gold Seek Radio. Yeah, he died a few years ago, Bob Chapman. He was we really miss him, my wife and I. We used to listen to him every Sunday, I think, almost every Sunday with, Gold Seek Radio. Brazilian stock market going bonkers as well, yeah. Yeah, Adrian Monster, yeah, that, you can bet they're saying that. Yields going up for the right reason. Well, now the Dow is only up 70 points. So yeah, we were up 140 just a few minutes ago when I was speaking to you guys. So maybe people are starting to wake up to the bond market. 318, yeah, we could get to three. I said we could maybe get to 3.25 by the end of the week. What about by the end of the day? 325. Do you like Paul Volcker? Not really. Even though I think he did the right thing to save the paper dollar, I guess, in 1980 by letting interest rates go up to 20%. But Paul Volcker was the assistant secretary of the Treasury in the Nixon administration, who advised Nixon to close the gold window. Instead of raising rates to protect the dollar, he advised him to close the gold window. So that's why I don't like Paul Volcker. He's a statist, he's a central banker. But as far as central bankers go, he's probably the best of the lot because he's not crazy. I don't think he would have done what Alan Greenspan did of pumping pumping the system with easy money every time the stock market went down. Lord Humongous, his answer to the question about Paul Volcker: do you like criminals? Yeah, yeah, he's one of the nice criminals, I guess you could say, even though all criminals aren't nice. Paul Volcker helped my granny become a millionaire. Bamboo. Well, a lot of people benefits in different way. You just have to be positioned the right way. Lord Humongous about Hank Paulson. So let's have a look. Where are we now? 10-year yield 318. What's the Dow? Dow is up 80, but the S&P is only up 0.2 now, up 6. So yeah, this is going to get very interesting. So she just kept rolling over CDs. Yeah, that's so what does that mean for some of the viewers that don't know? Well, it's her CDs, certificate of deposit. She probably had 1 month CDs, and that's why and then interest rates are going up. Let's say in 1 month she got 10%, then the next month the interest rates went up to 11, but she could renew her CD. That's why it's important when interest rates are going up that you don't have long-term bonds, because with long-term bonds, by the time you get your money back, the interest rates will have gone up from 2 to 10%. You will have missed. You will still be getting this 2%. So yeah, having short-term deposits in a rising interest rate environment is a good thing. All right, guys. Hi, Terry. Nice to see you. I've been here over an hour, so I will stay a bit more, maybe another 10 minutes, and see what the markets do, and then I'm gonna have to call it a day. Thank you, Gigsro Yui, for the birthday wishes. Terry Sheed. See, Joe, I'm old, single, and broke, mostly because I'm struck in this gold quicksand. Any advice on finding dates? Well, I'm not a dating advice service. Lord Humongous will be doing it free of charge. I was born broke and got most of it. Buy a calendar. All right. Dating advice, get rich. Yeah, that too, I guess. Dates from Audi. So what's the dollar doing? Let's see. Well, actually, the dollar is not moving. I mean, it's up quite a bit against the yen. That's why the dollar is up. The dollar is up like 2/3% against the yen. But against the euro is only the dollar. The euro is only down 1/4%. So it's mostly the dollar yen that's very strong. Uh, and the Dow now is up only 60 points, so it's quickly deflating. S&P is up only 4 points. Let's see, the 10-year yield. Well, that it's back down a little bit now. It's 316, but you can see. I think I've proved a little bit of the point. That the stock market could be in trouble, especially since I've come on air. How the yield's gone up to like 318, and how the stock market's losing a little bit of momentum. Dontro on Shambles, your friend Carlos called Martin Armstrong a crook, didn't he? Well, he didn't use the word crook, but apparently, Martin Armstrong, according to Carlos, was one of the biggest silver futures traders and used to throw around and manipulate the silver market. And when Warren Buffett came and started, not manipulating, but started taking delivery and screwing up with his market, he complained. Martin Armstrong complained to the CFTC, but and that's what I asked Carlos, why did he complain to the CFTC? Because I didn't know Martin Armstrong traded silver and was throwing loads of contracts around. And Carlos said, well, Martin Armstrong was the biggest player in the silver market. He moved the market himself, so he was a manipulator himself. So manipulator and crook are different words. So I learned something about Martin Armstrong because I didn't even know. He never said that he used to trade the silver market and move the price around. And Carlos should know because he was on the floor and he knew everyone who was trading and who they're trading for. Because brokers tell each other. Thank you, Renee, for the wishes. Billy is not gay. Is Billy gay? All right, everyone. So I'd like to thank everyone for the super chat donations, for just being here and asking questions, participating, and for all the new viewers or people here. Don't forget to subscribe if you enjoyed the live stream. I do videos as well. And yeah, thank you very much, everyone. And I'll talk to you later, probably, tomorrow morning's video. Take care, and let's keep an eye on the 10-year yield and see what happens.